have started to join in. So before we go ahead further with today's topic, third day of our 3-day series, I would like to know how you all are doing, right? आप लोग सब कैसे हैं? How things are going at your end? It's been quite a while since we have interacted, since we have communicated. Good evening, Nitin ji. प्लीज डू कीप यूजिंग दिस चैट बॉक्स बिकॉज मुझे आप लोगों से बात करना बहुत अच्छा लगता है, आप लोगों से मिलना बहुत अच्छा लगता है, और कोविड के चलते शायद एक यही तरीका है जब हम मिल सकते हैं, राइट? सो गुड इवनिंग सत्य जी, वी ऑल आर फाइन. एंड अपार्ट फ्रॉम दैट, हाउ डिड यू what was your feedback like? Did you enjoy, did you got good insights about the sessions which we conducted for the last 2 days? We tried to cover about the investments, about the charitable institutions. So how was it? Please, how are you, madam? Satya ji, मैं बहुत अच्छी हूँ. आप लोग सब हैं तो मैं अच्छी ही होंगी. So thank you for asking. Please do provide us with your valuable feedback. And क्योंकि जब आप प्रोवाइड हमें, जब आप अपने सेशंस या अपने फीडबैक से सजेशंस हमें देते हैं, हम उस पे वर्क करके आपके लिए ये सीरीज या वेबिनार्स अरेंज कर पाते हैं, बिकॉज आप हैं तो हम लोग हैं, राइट? सो आई रियली होप दैट एवरीथिंग इज गोइंग गुड एट योर एंड. आप आपके सारे क्लोज वंस, आपके your all close and dear ones are safe and doing well. See, I had and will always say that even though things have started to open up, but please do take good care of yourself, because our health is in our own hands, right? अगर हम लोग हेल्दी हैं तो हम लोग सीख सकते हैं, बढ़ सकते हैं. जरा सा भी अगर हमारे को हेडेक हो जाता है तो हम कुछ काम नहीं कर पाते, राइट? सो प्लीज टेक good care of yourself. Do take all precautions whatever necessary, be it wearing masks or frequently sanitizing your hands. So having said that, now not taking much time, so we will be covering after covering the taxation of charitable institutions and income tax on investment transactions, we are heading towards taxation of foreign transactions, right? So today's faculty will be covering the impact on receipts and payments to foreign entities, equalization levy implications, and TDS requirements. As I and Sachin sir were discussing about ये टॉपिक फॉरेन ट्रांजैक्शंस कितना बड़ा है, सो इट विल नॉट बी easier for him to cover each and every aspect of the transaction in the time slot of 1 hour or 1.5 hours. So please bear with him. Okay, आप जरूर questions पूछेगा, but अगर कुछ questions unanswered रह जाते हैं, so please do contact him and get your questions answered, right? So let me call upon Sachin sir, our faculty for today, though he doesn't need any introduction, and it's my honor that he never says no to me, but then it's become my duty to tell you all the achievements he had credited to his name. Sachin sir is a fellow member of ICI, having more than 2 decades year of experience. He is partner of Prakash, Sachin and Company Chartered Accountants. He has in-hand experience of taxation, both domestic and international taxation, and management consultancy. He has developed himself in the advisory, litigation, and handling other commercial issues. He had completed certificate course of ICAI on the international taxation and transfer pricing, auditing and taxation of non-profit organizations, courses on concurrent audits of bank, forensic audit and fraud detection, and many other courses. He is associated with Chamber of Tax Consultants. He has celebrated in around 300 seminars and webinars so far on the topic of domestic and international transaction, and written many articles on the same subject for various knowledge portals, including taxman.com. He is member of Study Group of Direct Tax Committee and International Taxation Tax Committee of ICI. Over to you, sir, for your deliberation.
Good evening to all, and thank you so much, Tanya, for a nice introduction. And the way you introducing me, I think it was an honor for me. And I'm very much thankful to Optotax for giving me this opportunity and inviting me again on this platform to deliberate on this very important topic, that is inter-transaction taxation and the other aspects of international transactions. So friends, when we talk about the international transactions, the first thing comes to our mind that something in dollar. So of course, something in dollar means something in foreign currency. But whether the taxation works in the similar manner, number one. Number two, earlier what happened when the physical transaction was there, we would be able to see the person to whom which we are dealing with, and we can ask for the documents, we can ask for the evidences while we are making payment, that then we approach to the bank asks for some documents, and then the transaction was completed. But nowadays, everything is digitalized. You don't know to whom you are dealing with. Sometimes when you're making payment, you can make the payment online through your mobile banking or through the internet banking you're using. So don't need to go to the bank. And at the same time, so many things, so many transactions you are doing. And of course, it is important to understand in this scenario that whether the taxability is required on the particular transaction or not. This is one thing. Apart from this, analysis of transaction or understanding of transaction in such a manner that to whether the taxation would be required or not, in that case, it is very important. So with this background, I have identified few transactions we will discuss. Let me share my presentation with you all. Just is this visible to you all?
Yes, it is visible. You can go ahead.
Okay. So this is what I have named is the discussion on technical discussion on international transaction, because more or less what we will discuss in the next 1.5 or 2 hours, that is all in the domain of international transaction. And of course, when we talk about the international transaction, the taxation is taxation would be there by default. So what is the meaning of international transaction? If you see, it is already defined in the income tax act, what is international transaction. But we are not going to discuss that part, because that is in relation to associate enterprises. When the two associate enterprises enter into an international transaction, then the transfer pricing would be required. Our discussion area is not that. So we are not going to understand that part. But just to give a reference that this term, if you see, that is already discussed in section 92. But let's understand. So what is transaction? And nowadays, what I understood, and based on my experience or whatever question we are receiving from my friends or from our colleagues, that based on this, I have prepared this few questions, and I understand that most of the chartered accountants who are in practice or who are who are working in the corporate sector, they might be facing similar type of questions, and of course, they are looking for the answers. So we'll discuss one by one, and we'll discuss the answers or the probable solutions also. I'll not say that yes, this is the only answer, but we'll discuss the probable answer. So first of all, the transactions what we have identified, because let's see either it's receipts or payment. So in the present scenario, when the COVID was there, most of the person who was non-resident, earlier living in a foreign country, they came back to India. They were in India for a longer period, and they were rendering services to their employer who was in a foreign country, either in UAE or USA or anywhere. So the question what I have raised first query, that salary received from foreign employer when the service is rendered in India. So when you read the question, you understand it in what context we are talking about. And Similarly, salary paid to foreign employee for the working or project in India. So vice versa, this situation may apply. So in this case, the important question which came to us that whether in this case the person who is rendering service in India and become resident by virtue of section 6(1), whether that he would be liable for taxation in India for the salary which he is earning from a foreign employer because he is rendering services to his foreign employer. So in that case, yeah, in this case, yes. If you see the number of, for the year 21-22, the relief was not there, which was in the year 2021 when the COVID-1 was there. But in the year 21-22, there is no such notification in this regard. And whatever the salaries earned by the person who is actually rendering services to a foreign employer, but by virtue of section 6, subsection 1, he becomes a resident of India. It may so happen that he will continue as a resident, but not ordinary resident. It may so happen, but for the purpose of section 6 of section 1, he becomes resident of India, and in that case, his income for the purpose of salary is taxable in India. This is one aspect. The second aspect is section 9(1)(2) says if the person is the salary will be taxable in the country in which from where the service is rendered. So in this case, service is rendered from India, irrespective of the fact that the person is rendering services to a foreign employer, or he's still getting money in salary in his foreign bank account. These are all immaterial. The important thing is from where he is rendering the services. If he is rendering the services from India, then in that case, his salary would be taxable in India in any case. Similarly, if the person who was in India for a longer period or for a certain period, but he was a foreign resident, so he due to COVID or due to by any reason he went back to his country and he's rendering services from that country, and the Indian employer is still paying salary. And then in that case, the salary will be taxable in his respective country and not in India. This is one part. Next question is sale proceeds of goods sold or services rendered outside India. So it may so happen that we are chartered accountant in India and we are rendering services to a foreign client outside India. So or we are selling some there is some business house who is selling goods to a person to outside India. Then in that case, whether his income would be taxable in that country also or not. This is a moot question. So if the person is rendering services from India to a non-resident outside India, in that, and the person who is rendering services, it does not have a permanent establishment outside India or a business connection outside India, in that case, his income would not be taxable in that country. Similarly, if your business house who has a setup in India and he is selling goods to a non-resident outside India, in that case, his income will not be taxable if he does not have a business connection or a permanent establishment in that country. So I think the flow is okay, and I hope whatever I am discussing is okay for you. Tanya, any input? Hello?
So not as such. Yeah, I was there actually.
Okay. So I'll continue with this flow, right?
Right.
Okay. So third thing is rent received for a property situated outside India. Example, what I want to take in this, assuming you are a person who you have a property, or your client have a property in USA, but now he's settled back in India and now he has no plan to go back to USA. So he let out that property and he's earning rental income in dollar. So in that case, whether since he is receiving money in India, it may so happen that the person is sending money in his Indian bank account. So he is receiving money in India. The person who is receiving is a resident, and he has a property in USA. Let's take example that in USA. In that case, his income, his rental income would be taxable in India by virtue of residency, and in USA by virtue of source. So of course, in India, because in India, if you see, Section 5 says if any income received or deemed to be received in India uh, is taxable in India. In case of resident, in case of again, in case of resident, any income deemed to accrue rise in India or deemed to accrue rise in India is to be taxable in India. And the third clause is, if in case of resident, if any income received outside India. So in this case, the person is receiving income outside India, although receiving Indian money, Indian bank account, but it is arising outside India. So in that case, that income is taxable in India also by virtue of residency, and this income would be taxable in the respective country also where the property is situated, and that is by reason of the source rule. So of course, the Indian person will get the tax credit, whatever taxes paid in USA. But the first right to tax the income is with the country where the property is situated. Alimony awarded by decree of court outside India. This is again a very debatable issue, that because I have gone through so many articles in this regard, and what I have understood that so many articles say that if you are receiving this in a lump sum, then it is not taxable because considering it is a capital income, and if you are receiving it as a recurring item, then it will be taxable considering it is a revenue income. However, my point of view is absolutely different in this case, considering the fact that whether first of all the test is whether it is income or not. How you are receiving is the secondary part. Whether you are receiving in one go or a recurring mode, it is a secondary part. The first test is whether it is income in the hands of recipient or not. Number one. Number two, assuming it is a it is taxable income, then under which section it will be taxed. So there are so many articles which say that it will be taxed under the head other sources. Why? Because you are receiving something without giving any consideration. So, and any amount whatever you are receiving more than 50,000, then it will be taxable in the hands of receiver in the year in which it is received, and under the head income from other sources. Agreed. Now the exemption is also there, the few which says that if the person is receiving from a relative, then this section would not apply. So whether the person is receiving this alimony from a relative or not, then of course the two views are there. Now, one school of thought says no, there is receiving is not from a relative because there is no relationship existing between husband and wife or the spouse. So this there is no relationship. The second thought is this income is arising because of the relationship was there at one point of time, and this otherwise this alimony situation would not arise. So the relationship would continue, and in that case, you see, it should be not form part of 56 10 because 56 to 10 because the exam, if you are receiving it from a relative, and that the view has taken in by one honorable ITT judgment. Number one, number two, number three, that what we have discussed, that whether ex-wife is a wife or not. So yes, she is still a wife because the Hindu law says that the ex-wife is also considered as wife. So wife is the person who is related in that case. So it never says that the relation should exist at that point of time when you're receiving the money. The relationship should exist. Because of this, the question of making this payment is arising. So this is one view that can be taken. Come to the next part, sale of service outside India through e-commerce platform. So this is a very common situation, and nowadays most of the Indian person are doing so. They registered their product on Amazon. They are selling the goods. They receive the order online, and they're selling the goods and making the payment using the payment channel of Amazon or other e-commerce platform. So whether in this case the income, the person who is selling goods outside India is taxable in the hands of in the receiver in India or not. So of course, whatever you're receiving as a resident in India is taxable in your hand if it satisfies the criteria of income. Number one. Number two, the question arises whether this income is also taxable in the country in which this arises. So this is if you are selling the goods or services from India through a e-commerce platform, then in that case, this income would not be taxable in the respective country where the customer is residing, because you are here and you are rendering services or you are providing goods or services from here. This is one aspect. When you are resident, we can say so, but when you are a non-resident rendering services, then our viewpoint would be different, because there is other law is there which says wherever you are, it is immaterial for me. When you are providing services in India, we will cover you in tax net, but of course threshold is there. So we'll discuss it on later part. Similarly, because we have discussed the receipt part, let's discuss some payments part also. So salary we have discussed. Interest paid to Indian bank towards loan taken for a project outside India. So an Indian company approached to the Indian bank to give loan. For why this loan is required? To carry on a project outside India. When the person is carrying on project outside India, then the question arises whether that interest is the Indian entity is making paying to the bank, whether it is subject to tax or not. So first of all, in your mind it will come that whatever you are paying interest to the bank is not subject to TDS, because although that is the income of the bank, but there not TDS requirement is not there because you're making payment to a bank. But for this purpose, you need to test with section 915 also, that whether in case of interest, if the interest is payable by a resident and that interest is taken for the purpose. So if it is payable by the resident, then of course it's subject to tax. Number one. Number two, if you're paying this interest for carrying on any project or business outside India, then of course it is out of tax net. So through two views it can be satisfied that it is out of the tax net. What we are going to discuss is a very common part, and most of the chartered accountants or the practicing other practitioners are getting this query from the client. Commission paid to non-resident for marketing outside India. Assuming my client is in India, they want to showcase their product outside India or market their product outside India. For this purpose, they approached to the commission agent outside India. So whatever is the sale would be there, we will give you some percentage, let's say 2%, 3% of the total sale price. And based on this, they are making payment and on monthly basis, let's say $1 lakh or whatever the amount it is. So the question arises, where the Indian entity is making payment for the commission outside India, whether it is taxable in the hands of the person who is receiving this money. So in this case, again, the situation arises, if the person who is receiving the money has a business connection or a permanent establishment in India, then in that case only the taxation would be there, otherwise not. So this is very simple to understand. So in that case, the tax would not be applicable. Rent paid to non-resident for a property situated in India. This is, I think, the reverse side of the situation what we have discussed just now. At a rent paid to a non-resident, it means the property is situated in India, but the owner of the property is now become non-resident, and the person who is taken that property on rent is paying to the non-resident in foreign currency. Now the question arises whether TDS would be applicable or not. So yes, because as we mentioned in the earlier situation, that the applicability of source rule would be there, irrespective of the fact whether the person is resident or non-resident. If the property is situated in India, then in that case the source is in India, and on the basis of source rule, the taxation will be there, and the tax will be deducted in that case. Section 911 also says the same thing, that whether directly or indirectly through or from any business connection in India or through a property in India. So it means the property is in India, then in that case the taxation would be in India. irrespective of the fact whether the person, whether the receiver is a resident or a non-resident, and whether he is receiving the money in India or outside India, immaterial. Salary paid to Indian employee in India who is working in a project outside India. It means you might have seen so many cases where the Indian company sent their employees outside India for purpose of project or deputation, but still the Indian entity is paying the salary to that employee in the Indian account for the purpose of meeting the expenditure of his household. So in that case, the question arises whether the salary what he is receiving in India is taxable in India or not. So the law is similar what we have discussed in the first question, that irrespective of the fact that whether he is receiving the salary in Indian currency or in Indian bank, the important thing is where the service is rendered. If he's rendering the services outside India, then it will be taxable outside India and not in India. Few more questions, then we will go to the next chapter. Since we have completed one slide, can I get some input from the audience that whether the flow is good or not, whether the way of explaining is clear to you? Can I get something from the audience or any query so far? No query. Okay. Okay. So next, yes, Rahul ji has some query. So yes, Rahul ji, you can post your query or you can raise hand. I think the team can allow you to speak. Salary credited. Rajni's answer. Tanya ma'am, can you please allow them to speak so that they can ask the question?
Sir, I guess that needs to be addressed by my team.
Sorry, you're not audible, ma'am.
Sir, I'm saying that it needs to be, the option needs to be get activated from the back end. So it will
Okay,
be
okay, no issue. So Rahul sir, Rajni sir, you can write your query on the chat box. So I'll definitely answer that query.
Yeah.
Okay, so come to next slide. So again, a few examples as we discussed in the earlier slide, that sale of vintage car by an individual to a non-resident. So the car is a movable property and not an immovable property. So in that case, where the taxation would be applicable, because the seller is a resident and the buyer is non-resident. Of course, the transportation would be a challenge, but for the purpose of taxation, we are not considering that part. We are only interested to test whether the taxation would be in the hands of recipient is applicable or not. So yes, in this case, the person who is making the payment to a person who is selling the car, the taxation would be there. Pension by a resident ex-employees from a foreign company for his foreign services. So the person who was rendering service, who was in an employment with a foreign company earlier, after his retirement, he came back to India. He is residing in India for so many years. Now he become a resident, an ordinary resident, but still he is getting pension. So the pension is taxable where? So this is a very important question, because in case of salary, it says the salary would be taxable in the country in which you are rendering the services. And if you know, the pension is also the similar similarly going to the in the nature of salary. So whether the pension will also be taxable in the country from which from where the receiver or the payer is there or the receiver is there. So these facts are need to be tested, and of course one thing which is important while answering these type of query, please don't forget to go through the DTAA with the respective country. Indian resident lawyer fees for arguing an arbitration matter in Indian court. This question refers to that assuming you have a client outside India and the matter is in India and the Indian lawyer is arguing that matter. In that case, of course, the question arises whether the person who is making payment outside India, so he will deduct tax in his respective country or not. So, of course, the question, the similar situation will apply if the Indian lawyer has a business connection or foreign establishment in that country, then the taxation would be applicable. Otherwise, since he is rendering services in India and he has never visited to that country or he has no business connection in that country, in that case, the taxation in that country would not be required and the income of the lawyer would be taxable only in India. So receipt of participation fees in Indian Expo 2020, India Expo 2020 for showcasing the product of foreign company. So in this example, the foreign company wants to participate in a foreign in Indian Expo, and for this they have to pay some participation fees. So if they have paid this participation fee, now the question arises whether the taxation would be there in the country from where the payer is residing. So again, the situation is there since the activity is completely in India, the expo in India, the Indian entity is providing the services. So the foreign company is not liable to deduct the tax in the respective in their country. That the taxation would be only in India, and that too the receiver will pay the tax and the payer don't need to do anything in this case. There's some spelling mistake. Booking of marriage hall in India by a non-resident by making direct payment. So a non-resident wants to book a marriage hall for the purpose of his daughter's marriage in India because he belongs to India. So he has still some emotional connect with India. So he want to do this in India. So in that case, the question arises that whether the person who is receiving money, the person who is paying the money, how the taxation would be there. Since the person is making the payment to an Indian entity, again, to an Indian entity for the purpose of activity is to be in India, and the place or the banquet hall or the marriage hall which the payer is going to book, and that too in India. So of course, the only the taxation will be only in India and not outside India. This is what we have discussed regarding the receipts. Of course, understanding as far as concerned to receipt part is quite easier because the TDS liability is not there in the hands of the receiver. The payer is outside India, and then it has to be tested that whether the tax is applicable, tax in that country is applicable or not. But while making payment, the TDS compliance needs to be done in India. So that is to be tested very carefully. Payment for purchase of software or a copyrighted item. So in case of engineering analysis center of excellence, the Honorable Supreme Court has clearly said that if you're purchasing a software or a copyrighted item, then it is not a royalty. So no question of royalty will be applicable and no TDS is there. So it's a complete purchase sale transaction. Payment of pension to non-resident employees outside India. So again, we have discussed the similar thing in the reverse aspect. So in that case, the TDS would be considered separately. IPL match fees, because IPL is now going on, and the IPL match fees and endorsement fees paid to foreign players. Because as you know, as per the mandate, so every team has some foreign players are there, and they are getting match fees. And during the stay in India, they participate in some endorsement, and they get the fees, handsome fees in that case also. So whether the taxation will be there or not. So of course, Section 115 BBA clearly says that if the person is not a citizen of India, and the person is a non-resident and getting match fees or advertisement fees, then in that case, the TDS, his income would be taxable in India at the rate of 20%. Then the payer is liable to deduct tax in that case. So payment for participation in Dubai Expo 2020 for showcasing product in India. So this time the Indian company wants to showcase their product in Dubai Expo, and they book the venue there. In that case, the taxation will not be required because you're making payment to a foreign entity for the purpose of utilizing the space, and that too that too outside India. So in that case, the TDS liability will not be required in India. Payment to a doctor who given his consultancy through an e-commerce platform. Of course, this is a question of a discussion, and what we will discuss in detail in the latter part, that whether you are making payment for a consultancy to a doctor or a chartered accountant or any other consultant outside over e-commerce platform, then whether the TDS would be there, and if yes, then who will be able to deduct tax. So for this purpose, their law has evolved after the digitalization, and it is very important to understand that whether the TDS would be required in this case or not. If TDS is not required, whether the equalization levy would be applicable in this case. So we'll discuss equalization levy. So far we have discussed regarding the transactions, because what I understand personally is that if you are clear with the transaction, then you can apply the law accordingly. But if you are not clear with the transaction, then the law, you won't be able to apply the law. And if you fail to apply the law properly, then of course the liability would be there, or there are chances for non-compliance also. So when you see that now we are into equalization levy, the part 2. If any query is there for first part, I'm ready to take it. Yes. So Rajneesh sir is asking that a salary receipt in NRE account chargeability in respect of 5(2)(a) seafarer circular applicable. Sir, in case of seafarer, yes, this you are right that the situation would be different now, because they are not rendering the services by staying at one place. In our example, what we have taken, that if the person is residing in another country and rendering services to the employer who is in another country. But in case of seafarer, they move around the world, and in that case, since they don't have a fixed place from where they are rendering services, so there is circular in this regard, and that circular is always valid. So come to equalization levy. First of all, let me clarify that this is not part of Income Tax Act. This is part of Finance Act, Chapter 8 of Chapter 8 of the Finance Act 2016. When this provision was came into the Finance Act, there was only section that was 165 for the purpose of chargeability. Subsequently, they added one more aspect, that's 165 capital A. The first aspect was item was 165, that is for the purpose of online advertisement services. Because as you know, when you showcase your product or advertise your product over Facebook or YouTube, then the question arises whether when you are making payment for the advertisement, whether you are deducting tax. So the answer is no, we are not deducting tax. Why? Because the Facebook or the YouTube, they don't have a business connection in India or a permanent establishment in India. Since they don't have a permanent establishment in India, and they are a non-resident entity, so in that case, the taxation is not applicable. This is the first and foremost thing. Then the government says, okay, if this is the thing, then of course we are losing so much of taxes, because they are getting hefty amount from India by showcasing the product or by way of advertisement of the Indian business entities. In that case, we are losing a lot of taxes. So how to grab that part? So they introduced this section. Why they came with the Finance Act and not with the Income Tax Act? Reason being, if you go to the Income Tax Act, the section 90 subsection 2 is there, which says notwithstanding anything contained in this act, if the beneficial provision of the DTAA and the Income Tax Act would be applicable, which whatever is the beneficial to the SSC. Now the question arises, since this amendment was not there in the DTAA, so you can take the relief of DTAA that since this is not taxable as per the provision of DTAA, and I can apply whatever is beneficial to me. So in that case, this is not I'm not liable to tax in India. So the government says, okay, let's put chapter 8 separately. And since it is not part of the Finance Act, so it is not part of the Income Tax Act, so it is out of the purview of section 90 subsection 2. So no question of no question of the beneficial provision applicability. That is the separate aspect, and that the tax is applicable in that case. So with this background, just try to understand. So I have presented this for the purpose of comparison by that one says what is 165, what is 165 capital A. So if you see the nature of services covered are different, the basic difference is the nature of services, online advertisement, provision of digital advertising space, what we have given in the example that Facebook or YouTube, or any other facility or services for the purpose of online advertisement. So that section was 165 was majorly for the purpose of advertisement. So either online advertisement or provision for digital advertisement space or any other facility or services for the purpose of online advertisement. So this is only related to advertisement, but the C165 has a broad aspect. So e-commerce supply of goods or services. So this covers almost everything. Service provider in case of 165 is a non-resident. Similarly, in case of e-commerce operator, he will be non-resident, but he must be an e-commerce operator. Who can be e-commerce operator? That is defined in that section. So it is not required to debate here, but it is clear that this is applicable only to the person who is an e-commerce operator and the recipient of services, because of course, once one person is providing the services, so of course the other person is receiving the services, and that person who is receiving the services are in India. So Indian resident carrying on business or profession. So this is applicable only to the extent the person who is carrying on business or profession. Assuming I am not carrying on any business or profession, and I want to advertise something. So there is a remote chances that since you are not doing any business, why you will go to advertise anything? So of course, this is applicable to the person who is carrying on business or profession, and that person is an Indian resident. Number one. Number two, non-resident this is applicable to non-resident also, but only those non-resident who has a permanent establishment in India, and that advertisement is directly related to the product or services of such permanent establishment. This is one part. In case of e-commerce operator, of course, it is immaterial whether the person is carrying on business or profession or not. So a person who is resident in India, yes, this e-commerce supply is applicable. A person who buys goods or services, it means if you are a person resident in India and you are taking some services of e-commerce operator who is a non-resident, then this section 165 capital A will apply. The second part is a person who buys such goods or services or both using internet protocol located in India. So if the person, assuming he is outside India for a particular time, for a particular period, but he was using Indian protocol, so IP address in that country, or if the non-resident came to India and he is using the IP address, an Indian IP address, in that case also the tax would be applicable. Now this is very important to test how to check that how the IP address is used for India. So if you see Amazon.com, Amazon.co.in, Amazon.au, so they use since they have many such type of features through which they can track that which IP address is being used for the purpose of ordering this particular goods or services. Since taxation is there, so exemption is also there. And if you see in both section 165 and 165 capital A, exemptions are there. So when equalization levy is not applicable under 165 when the service provider has a PE in India. So if you have a PE in India, then it says that even though your absence, the PE would be applicable the PE question will come only when you are a non-resident. So if you are a non-resident and you have PE in India and you are providing online services, but this is you are providing online services. So first the test was the person who is the recipient of service has a permanent establishment in India, then this is applicable. Now the exception is when the person who is providing the services, these services means advertisement services, online advertisement services, and he has a permanent establishment in India, then we will not go for section 165. Reason being that it is already covered in section 9, and then why to go for section 165? Consideration is less than the threshold limit, that is 1 lakh. Service is not received for the business or profession. So assuming for the purpose of my personal benefit, I have taken some advertisement, but that situation will be far-reaching. But if there is anything, then in that case it is not applicable. E-commerce supply, the no equalization levy shall be charged if equalization levy is charged under section 1. So if it is charged in this section, then 165A will not apply. That is going without say. That is not required to discuss. Considering consideration is less than the threshold limit, 2 crore threshold, the e-commerce operator has a PE in India. If the person has a PE in India and from that PE, the person is providing the e-commerce services, then of course the taxation would be applicable as per the Income Tax Act and not as per the Finance Act. Tax rate threshold, blah blah. So these are this slide is basically the procedural parts. Will not go to discuss the chargeability part we have discussed. In case you have any query, we are ready to discuss. But apart from this, try to understand, since e-commerce, the equalization levy is a temporary arrangement. As you know, that section 911 explanation 2A is already there, and that is the effective section. So this section is already in effect, and the notification came last year in this regard, and they have made this clear that the threshold limit has already been defined in that case. So if you have a number of users in India, the 3 lakh number of users and the 2 crore or the 2 crore of turnover, whichever is so in this case the significant economic presence would be applicable, and if significant economic presence is in India, you have a business connection in India, and since you have business connection in India, then in that case, of course, the taxability would be there as per the provision of the Income Tax Act. Now the question arises, just assuming I fall under that category of section 911 explanation 2, whether I'm liable to tax. So the first question is yes. Now the second question is, if yes, then whether the DTAA benefit is available to me. Yes. If you are the party of the agreement country, then in that case, the DTA benefit would be available to you. And since such type of amendment is not yet came into force in DTAA, so you can take the benefit. Let's see, my income is not taxed. You cannot tax me because I got the benefit of section 90 subsection 2. So again, come back to this e-commerce operator, this e-commerce supply of services. Again, a very important question came that let's see 165 capital, and just visualize one thing. Many of you have downloaded during this lockdown the OTT platforms like Netflix or whatever name called you. Most of us we downloaded and still and paid the subscription money. So I am the one person, but like me, there's so many persons in India who have downloaded this. So it is, I think the threshold of 2 crore rupees has already been achieved, number one. Number two, the number of users is also more than 3 lakhs. So in that case, whether the significant economic presence is there, yes, in that case, significant economic presence is there, but they will definitely get the relief of the DTAA, and came out from the provision of section 911 expansion 2A. Now the question arises, whether section 165 capital would be applicable in that case. Yes, section 165 capital is applicable in that case, and the person who is receiving the income, it means, assuming we are taking the example of Netflix, then Netflix has to pay 2% of its total consideration in India as an equalization levy. So we have discussed first part, that is receipts and payments of international by virtue of international transactions. We have identified some international transactions. Then we discussed equalization levy. If you have any query on equalization levy, please feel free to ask. Make this chat box as a communication tool, and you are free to ask any queries. Now the third segment, because in the first segment we discussed the situation, in the second segment we discussed the chargeability of the transaction in Income Tax Act, and at the same time in case of in equalization levy. Now the question arises, which is very important, since the taxability is there, so of course you need to do some compliances. The basic compliance is the deduction of tax at source, because if you fail to deduct any tax at source and you're making payment to a non-resident, your income would be disallowed. So let's just go through some example, some situation with me, and understand that whether the TDS would be applicable in this case or not. If yes, whether the 15 CSCB is required to be issued in this case. Because whenever we discuss section 195, that is making payment to a non-resident and the deduction of TDS situation, then of course the 15 CSCB is the integral part of that section, so we cannot discuss it completely without discussing 15 CSCB. So let's take a very simple example. Whether for all transactions I am required to issue 15 CSCB, because this question, I think this came to me oftenly from so many colleagues, that whether 15 CSCB is required to be issued in all cases. So yes, 15 CA or CV. Just try to understand what is 15 CA, what is 15 CV. So if you see, 15 CA is required for every transaction, respective except the transaction 33 transaction, which is mentioned in Rule 37 BB. 15 CA is required to be issued in every case. Now the question arises, whether the sum is not chargeable to tax. In that case also the 15 CA is required. Yes. If the sum is not chargeable to tax, in that case also 15 CA is required. So if you see, 15 CA has 4 parts: Part A, Part B, Part C, Part D. Part A is where the sum is chargeable to tax and the total amount is more than 5 lakh rupees to aggregate during the year. The second part is the payee. The payee has obtained a lower deduction certificate. The fourth, the Part D, is making payment and the sum is not chargeable to tax. And Part C is when the these 3 situations are not there, the Part C is applicable. And if the Part C is applicable, then in that case Form CB is required. That CB is to be signed by a chartered accountant. So as a chartered accountant, you are supposed to issue a certificate under section 15 CB, then only 15 CA can be issued by the payer. Whether 15 CA or CB is required to be issued at a time of booking of the transaction or at a time of making the payment. So again, this is a very important question, because if you see, the 15 CA is required for the purpose of deduction or declaration of deduction of tax. But 15 CB is required for the purpose of determination of tax. So 15 CB is required at the time of booking the transaction, and 15 CA is required at the time of making the payment. So I understand that most of you may not agree with me with this interpretation, but unfortunately, if you read the Form 15 CA requirement, it says that 15 CB, 15 CB requirement, it says that 15 C, the purpose of 15 CB is the determination of tax. So when you will determine the tax at a time of booking it. Otherwise, if you determine the tax subsequently, then it may so happen that you have booked some other amount or some lower amount, and the difference would be chargeable to tax in your hand by virtue of disallowance under section 40A. Whether tax is required to be deducted on a whole amount or part of the amount. This is again a big question, because let's take a simple example that I am selling my property. A non-resident is selling his property to a resident. Now and that too at the value of rupees 1 crore. Of course, you know that he has purchased this property 5 years back at the value of 80 lakh rupees, and by way of doing indexation, he is not getting any profit, and he is into loss by selling this property to me. Now the question arises, at what rate I will deduct the TDS. So section says, if the sum is chargeable to tax, the tax should be deducted. On which amount? On the whole amount. So in this example, if you see, on 1 crore rupees, yes, on 1 crore rupees. At what rate? At the rate of rate in force. So from where it will come, the rate of rate in force, section clause 2 of subclause 37 capital A says that, and that is the rate given in the Finance Act. The question arises, if this is the situation when the person is not getting the profit, while deduct TDS at the rate of 22% plus 20% plus surcharge plus education cess, and at the gross amount and not at the net amount. So if you want to deduct tax at a lower rate, then you have no authority to determine the tax rate by your own. You have to approach to the department, to the jurisdictional officer, make an application under 195 subsection 2 with a detailed fact that the tax is not required to be deducted or required to be deducted at a lower rate. Then in that case, he will issue the certificate and he will mention at what rate the tax is required to be deducted. It may be at 2%, 1%, or any rate. You are free to deduct at that rate. And in that case, you are supposed to issue 15 CA only, and that too part B. Other 15 CSV is required for salary payment also. So while making payment of salary outside India, of course, I'm not deducting any tax because his salary is chargeable to tax outside India. We have discussed this situation earlier also. But I'm making payment. Now the question arises. If you read section 195, it says the sum is chargeable to tax except salary, interest under section 194 LB, LC, LD, bracket closed. So if this is the situation, then in that case, section it means salary is out of the purview of 195. Now the question arises whether the salary which is out of the purview of 195 while remitting, whether 15 CSV is required. So yes, in that case, what happened basically, when you are making payment outside India, whether or not the sum is chargeable to tax as per the provision of this act. So yes, salary is chargeable to tax, and that too as per the provision of this act. So that you are supposed to issue the form 15CA, and you can release the payment by issuing form 15CA. So whether CB can be revised if there is wrong information furnished. CB cannot be revised. Yes, CA can be revised. While making payment to Netflix for subscription is also liable to tax, that we discussed just now, that yes, if you're making payment to Netflix for subscription, it is also subject to tax as per the provision of section 9(1)(1) explanation 2A. Assuming you take the benefit of DTAA, then in that case, equalization levy would be applicable. Now the similar question will come to your mind, that whether in case of while making payment and the equalization levy is applicable, then in that case also 15 CSEV is required. So in that case also 15 CSEV is required, because you are remitting payment outside India. This is very common situation, because you are making payment through credit card. This is because, assuming a situation, you are online, you're doing some transaction online, the amount is appearing, let's say $100 or $500 on your screen. You just put your card details and submit it with the PIN number, and then the payment is done. Then you are not authorized to change the amount to the extent you want to deduct the tax. But in that case, and this is one situation. Second situation is whether in that case also 15 CSEV is required. Yes, in that case also 15 CSEV is required, and that too on or before making payment. Whether 15 CSEV can be applicable while transferring money from NRO to NRE. So of course, in this case also 15 CSEV is applicable, because 15 CA is applicable because you are transferring money from one account in India to one account outside India. So NRE account is basically considered an account outside India. So in that case also 15 CA is applicable. But practically speaking, in most of the cases, banks are asking for 15 CB also. However, it is not required in maximum cases, but since they are asking, the chartered accountants are issuing such certificates. Now come to the important aspect of the TDS provisions, because when we understand the transaction, of course, the TDS applicability would be there. And while discussing the TDS provision, the situation, what are the important aspects which needs to be considered while taking the decision that whether TDS would be applicable under section 195 or not. So first of all, you need to test the transaction with section 4, whether it is chargeable to tax or not. So basic charging section is section 4. So if it is chargeable to tax, then yes, we will go to the next level. That is section 5. Section 5 is basically part of total income. So scope of total income, which comprises two sections. 5.1 that is for resident, and 5.2 that is for non-resident. So if it is for a resident, so since we are making payment to a non-resident, so we'll bother only for the part 2. So part 2 says if the person is received in income received or deemed to be received in India by such person or by any other person in behalf of such person in the previous year, then it will form part of the total income. Number 2, if the income is accrue arise to him or deemed to accrue arise to him in the previous year, then that will form part of the total income, and the income would be chargeable to tax in India. Now section 9, because we have tested in 5, so what is deemed to accrue arise? For this we need to go to section 9, understanding the provision of section 9, then we will go to exemption sections, whether any exemption is available, like section 10.4 is available, section 10.6 is available, if any 10.6.6 is available. So if there is any exemption is available, so anyway exemption is available, so out of so the total outcome is 0. So no question of no income, no taxable income, so no TDS. Deductions, if any deduction is available to such person, then apply the tax rate of under 115, 112 as the case may be. Then go to section 90, whether any relief is available to him or not. If any relief is available, then apply the provision of DDAA and give the benefit accordingly. After giving that benefit, now you can test the taxability as per the provision of 195, and you are here to issue the certificate to such person. So this is the basic and small process of testing, or to answer any query that whether if so whatever this transaction you discussed so far, so as whether on this transaction my client is responsible to deduct TDS or not. This is a very simple question, and most of you might have receiving such type of queries from your client over phone. that, sir, I'm going to enter into such a transaction. Can I deduct TDS, or do we need to deduct TDS? In case of, at least in case of foreign payment, just take a breath, hold on for the time being. Let's try to understand the complete transaction along with the documents, because sometime happen the client what he is saying and the document what and as the facts as per the document are absolutely different. So in that case, just go through the document, understand the contract between the parties, and then which country is the beneficiary country, which country is the payer, where the source will apply, where the utilization will apply. As you applying all these aspects, then only go for 195 and then issue the certificate and give an opinion regarding the deductibility of the taxation, if applicable in that case. So this is the smart process. So in case you have any query, please feel free to raise your hand and ask the queries, because as I mentioned, and as Tanya ma'am mentioned in the beginning, right, because this explaining everything or considering all type of situation is not possible in the given frame of time. But we can discuss if you have any query, and we can also, we have so many slides to discuss with you. But if you have any query, that would be I think directly hit on answering to your query would be give much benefit to me as well, because of course that would be a practical situation. So section 4, we have discussed that it is basically the chargeability section, and subsection 2 of section 4 talks about the deduction of tax at source. So this is the section from where the Income Tax Act get the power to deduct the TDS. This is very important and interesting, and we can spend 2-3 minutes on this slide. This section we all have got. Not standing anything, this is basically the deduction of disallowance of expenditure if you fail to deduct the TDS, and that too as per the provision of chapter 17B. So in case of an SSC, any interest blah blah payable, which is payable outside India, or this is very simple situation outside India, you're making payment outside India, you'll approach to the bank will say come with the 15 CSV, and the taxation will be the chartered accountant who is issuing the certificate, he will do all the he will complete all the process what we have discussed in the just earlier slide, that starting from section 4 to coming to section 195. But the situation which we are going to discuss just now is which is payable in India and to a non-resident. This is a very important situation. You are making payment to a non-resident in India. In that case, whether section 195 will apply or not. Section 195 says any person responsible for making payment to a non-resident. It doesn't say outside India. It means if I'm making payment to a non-resident, whether he is in India or outside India, this section is 195 would be applicable in that case. So if section 195 applicable and I fail to deduct TDS, then in that case, the disallowance is there. The interesting situation is when you are making payment to a non-resident in India, sometimes you may not be aware that he is a non-resident because he is in India and he has given you the bank account number, Indian bank account number. So you deposited the bank in the bank, assuming you're purchasing the property. The person who is the owner of the property is living in Canada, came to India, discussed with you, negotiated with you, and completed a deal, given you the bank account detail and PAN card, the Indian bank account detail, Indian PAN card, and he has a address proof also in India. He has given that also to you. Considering all these documents, you very well understood that he is a resident of India because he is providing all the documents to me. Because I don't know at what point of time it will trigger in your mind that he may be a non-resident. So this is basically the basic section or basic condition. I can say that the pay should be either a non-resident, not being a company, according to the definition of section 6. So that we have, this is basically the whole section 195. If the person is responsible to, if a person is responsible for making payment to a non-resident, comma, not being a company, comma, or to a foreign company. So this is basically the part. So if you're making payment to a foreign company, the TDS would be applicable in that case under section 195 only, irrespective of the fact that that foreign company become resident of India by virtue of section 6 subsection 3. So section 6 subsection 3 says a company is said to be resident of India when it is registered under the Companies Act in India, and the second is the place of active management is in India. So let's just say, take a simple example. Your client incorporated a company outside India, that is in Dubai, but they are controlling and managing that company from India. So it can be said that that company is actually resident of India. So that company become resident of India. Now I'm making payment to that country, that company. So whether the tax would be applicable as per the provision of section 195 or other than 195. So to remove this situation, the section framed in such a manner that foreign company is always be a foreign company, and even though it become resident, that section 195 will apply in all cases. Rate and rate in force, we have discussed 237 capital A, that is already given. Rule 37 BB is the basic rule, and that is integrated with section 195. So whenever you take a decision, go to 37 BB, refer the which are the transaction which is listed therein. If your transaction is falling under that category, no need to deduct TDS. Number one, no need to apply 15 CSCB because there is an exemption is given there. So come to the next part that we have discussed this earlier also, that the person, because as you know that section 195 subsection 7 inserted in from 1st July 2012 says a person responsible for paying to a non-resident in relation to a specified class of person or cases which are identified or notified by the board. So in that case, in that case, the TDS is required to be, whether TDS is required to be deducted or not, that is to be clarified by the board. Exempted income, we have already discussed that to whom you are making the payment is the income is exempt by itself. So in that case, the taxability would not be there. Now the question arises whether the sum is tax exempt, whether it is chargeable to tax. Yes, the sum is first chargeable to tax, then it is exempted. So it will not form part of total income. That is income, but that will not form part of total income. That's why the exemption benefit is given, because that exemption benefit is given to them. So if the sum what you are receiving is not an income per se, in that case, the chargeability section would not apply. So section 4 is not there, section 5 is not there. So no question of section 195 will apply. But if the income is chargeable to tax, but exempt, then yes, 4, 5, 9 is applicable. But subsequently, section 10 is there, which says it is exempt. So no question for moving ahead. Interest on refund of excess TDS. So this is basically regarding when the company is making payment and the department says that you're supposed the deduction certificate will not be cannot be provided in this case and deduct the tax at the higher rate. In that case, the company deducted the tax at the higher rate and challenged that certificate before the CIT appeal. Earlier, as you all know, that section 248 is now amended. So in that case, since you have deducted the tax at the higher rate, you can approach to the higher authority, that is CIT appeal, that I have deducted the tax based on the certificate issued by the assessing officer, but I understand or I presume that this tax is at the higher end. So I want to I want to file an appeal. So the moment you file the appeal, of course, and you present the case properly, the department will refund the tax amount of the higher amount, whatever they feel that yes, this much is higher, and on that amount you will be eligible to get the tax, get the interest also. This we discussed earlier also, time of deduction of tax. This is again a very important aspect. If you see, basically all the sections of section of the TDS provision say that the tax will be deducted at time of making payment or credit, whichever is earlier. Now the question arises that while making payment to a non-resident, at what time I will deduct the TDS? So it says when you book it into the books of accounts, or either you're making payment to the non-resident, whichever is earlier, deduct the tax. Now, the client came to you for the purpose of issue of certificate under section 15 CA or 15 CB. So you need to put the date of transaction in which and the exchange rate on that date. So assuming the transaction took place in the month of December, and in that month the exchange rate was 68, or let's say 70 for the sake of convenience. 70 rupees the exchange rate was there. Now your client wants to make the payment, and now the exchange rate is 75, 76 only. So whether a TDS will be deducted at the converting the same with 70 rupees, or considering the amount, considering the item with 76 rupees. So the loss is the tax will be deducted at time of making payment or credit, whichever is earlier. So I have credited this amount at the rate of 70 rupees. So I'll deduct the tax only at the rate of 70 rupees and not at the rate of 75 or 76 rupees, as the case may be. But assuming I'm making the payment now as an advance and I have not booked that amount earlier, then in that case also the TDS would be applicable to the present rate and not at the earlier rate. So assuming you received the invoice in the month of December, but you did not book that invoice in your books of accounts, so no question of TDS would be arises on that amount. So in case of payment of penalty, of course, if you're making a payment of penalty, of course, to a foreign government or to another entity, then in that case it is not tax subject to tax. This we discussed, making payment to in India to a non-resident. Interest paid to non-resident, where interest was paid by bank to a non-resident depositor. So I think these are basically the situation just to understand that where the taxability would be would arise. So whether the taxability would be there in India or outside India. So just take a simple example. Assuming you purchased a car from Mercedes Finance by taking loan from Mercedes Financial Institution Company, which is an NBFC, and the EMI is fixed, and you are making payment of EMI, which consists of interest and tax. Now the question arises, how you will deduct, whether the first question, whether the TDS will be applicable in this case or not. If yes, whether how to deduct the TDS. So can I expect some answer from the audience that whether in this case the TDS would be applicable or not? So if you're making payment to a NBFC for interest amount, whether TDS would be applicable or not? So Ashok sir is saying yes, because the exemption is given only for the banking institution, and we are taking the example of non-banking institution. So Ajay sir is also saying yes. assuming a situation when you're making payment, you have taken a loan from a bank which is outside India, and you're paying interest. Now the question arises whether the TDS would be applicable while making payment to a bank which is outside India. So whether in that case also TDS would be applicable or not. Any answer from the audience? Okay. So if you see, the section says, as per the banking company, as per the provision of the Banking Regulation Act, but the foreign bank which is not registered as per the Banking Regulation Act of India. So they are registered as per their Banking Regulation Act. So in that case, while making to a bank outside India, of course, we'll deduct the TDS. Okay. So now, another interesting situation arises. Assuming you are not making payment, but you are settling the payment, assuming you purchase the goods from one person, and the same person you are rendering some services, and now you have settled that amount by your receiving, that is your debit amount, and the remaining you paid, or there is nothing remaining, so no need to pay. In that case also, whether the TDS is applicable or not. So any answer from the audience? So Ayah Gupta sir is saying yes. Any other input from the members, from the audience? So simple example, assuming I have given some services to a foreign client, and I have received some goods from that client also, and now I have settled that amount with my liability. So whether I am required to deduct TDS or not, because now nothing is payable, it is 0, 0. So whether TDS is applicable or not in this case. Any input? So yes, yes, yes. So the law is very clear in this regard. It says whether you actually make the payment or not, it is not relevant for this purpose. If you are settling the payment with your with your payable or receivable, as the case may be, or if you're making if you're disposing the payment of liability by giving some goods, in that case also the TDS is required to be deducted on the whole amount and not on the net amount. So netting off is not allowed. Business connection, we discussed just now that unless there's a business connection, the foreign entity carrying on business or profession cannot be taxed in India. So this is the tug of war between the department and the SSC. Department always try to put that yes, you have a business connection in India, and SSC always try to pull him out that no, I don't have any business connection in India. Assuming he has a business connection in India, in that case the tax rate would be different. Number one. Number two, that there are few situations, like if you are providing royalty payment is there, FTS payment is there, then in that case, in these cases, the test of permanent establishment is not required. This is very interesting, that whether the payment of reimbursement, whether in case of payment of reimbursement, whether the TDS is applicable or not. So in this case, yes, if it is a pure reimbursement, then it means you have back-to-back invoice to establish that yes, it is pure reimbursement. Then in that case, TDS is not applicable. But if there is some profit element is there, then in that case, of course, the TDS would be applicable on that amount. at a time of credit or payment, we have just discussed this here. We have given some example to understand set off of payment we have just discussed, and are not having PAN number. This is again a very crucial situation that a non-resident doesn't have a PAN number. Then in that case, whether 206 is applicable or not. So if you are making payment for interest, royalty, FTS, capital gain, and dividend, these 5 items are there. If you are making payment for these 5 items, so section 206AA is not applicable when the person who is receiving the income is providing the following details. What are the details? That is name, email ID, contact number, address of the country of residence, tax residency certificate, identification number, and blah blah. So if he provides, these type of information, then section 206AA is not applicable. Now the question arises whether 206AB is applicable or not. So if 206AA is not applicable, 206AB is also not applicable in that case, because it is not required to have PAN number. So it cannot be said that you have not filed a return. It is not required. So this is all from my side. If you have any query, I am here to take all the queries from the participants. Yes, Tanya ma'am.
Yes, sir. If anyone have any query, please right now is the time, since you are attending live session. So this is the advantage of attending the live sessions, and the session should be every word of your second, right? So please take some time out. Sir is with us, and then we all will get occupied with our day-to-day schedule. So if you have any concern, like Gupta was asking, before, please elaborate on TDS on software import in digital form for trading by Indian company.
Okay. So while making payment for purchase of software from outside India, it is very important to understand that this is actually a purchase of goods or services. So the code has already said that when you're purchasing a software is a goods. Since you're purchasing a software, and that too in the not customized as per your requirement, it is on the shelf, and you're purchasing that software, then in that case this section would also, it is not chargeable to tax in India unless it has a business connection in India. Number one. Number two, assuming you're purchasing a software by way of using the license agreement. So we generally, when we download something, we just give the tick mark that yes, the user, that is called the end user license agreement. So if you have, that is the part, it means there is some limitation, which is you cannot copyright that item, or you cannot copy that item and sell into the market or use it for the purpose of commercial exploitation. So in that case, the royalty would not be applicable in that case. So this is the very simple to understand by reading the Honorable Supreme Court judgment, Engineering Analysis Center of Excellence, and very detailed discussion about the taxability of software by using the end user license agreement and other software.
Okay, so I guess that answers the query of Ajay Gupta ji. Since we are not getting any questions as of for now, I hope that all the 3 days were really insightful for you, and you got to know something new from all the 3 eminent faculties we had for this series we conducted. And by any chance, if you miss out any session, you can always go and watch on our YouTube channel. All the 3 sessions are there. We go YouTube live as well. So if due to your prior commitments you were unable to attend the live sessions, you can always go on Optotax YouTube channel and refer these videos for your future references. I believe that since we haven't received any queries, it's time for us to end the session. And please do stay connected with us. We are working for your empowerment and growth, and we will keep on bringing such insightful series, webinars to enhance your growth and knowledge, because together only we can grow and work towards our development. Considering that, please stay safe, stay healthy, and please do provide with your valuable feedback and suggestion. And thank you so much, sir, for taking out valuable time for empowering the professionals. We'll keep asking for your help every month possibly, and we would love to hear from you as always. So thank you all the lovely participants for patience hearing. And as I said, you must have got something or the other new and insightful from these series. Thank you. Stay safe and stay happy, and have a lovely weekend ahead, evening ahead.
Thank you so much.